Hey guys, welcome to the channel. So this is going to be a completely free beginner's guide to investing in cryptocurrencies. It's going to be very long, it's going to be very in-depth, but it's going to go over everything you need to know to start investing in the cryptocurrency market today. And if you guys don't mind, make sure to hit that like button and subscribe to support this channel. Let's get started with the course. So let's talk about the things that we're going to cover in this course, right? First, we'll go over my background as an investor, why you should listen to me. Then we'll go into why you need to invest as soon as possible. We'll be talking about why you need to not time the market, but rather be in the market for a longer period of time. Then we'll go into an introduction about cryptocurrency, basically what it is, what blockchain is. And if you guys are interested in actually making some money with your computer, we'll also talk about crypto mining and how you can make some passive income doing that. Then we'll go into some of the very popular cryptocurrencies right now. And with that, we'll go into what dictates the value of a cryptocurrency. Why are some cryptocurrencies expensive and why are some of them super cheap? We'll talk about the risk of investing in cryptocurrency. You guys, it's not the most safe investment out there, but in the last few years, we've seen that cryptocurrency can make you a lot of money. Now, the gains in the past don't necessarily mean that you're going to make money in the future, but it's just cool to see how much money people have made with crypto. Then we'll go into what crypto wallets are and the types of crypto wallets. And then the section after that, we'll go into the different types of platforms you can use to actually invest in cryptocurrencies. I'll actually be taking you guys through each of these platforms and showing you guys how to use them. Then we'll talk about an online crypto savings account that I personally do use. And then after that, we'll talk about doing your own due diligence and researching for different cryptocurrencies. This is extremely important because you don't want to invest blindly. You need to know what you are investing in. Then we'll go through some important valuation metrics I use to actually analyze different cryptocurrencies, as well as talking about important qualitative indicators of what makes a good crypto. I'll then teach you guys how to read a white paper, as well as some really great crypto news sources that you guys can go to learn more about cryptocurrencies. Then we'll talk about what tokens are and initial coin offerings, ICOs. I'll give you guys my own research and beliefs about timing the market. Then we'll go into the Crypto 20 Index Fund, which is just a pretty cool way to invest in cryptocurrencies. And then we'll talk about how much money you should invest. This really depends on your situation, but we'll go through some different scenarios. After that, we'll talk briefly about cryptocurrency taxes and what you need to do to prepare for those. And finally, the actionable steps you can take. This is going to be an overview of the whole course and the things you can do right now to get started investing in crypto. Okay, so let's go over my background as an investor. So I am a real estate broker and I'm also a serial entrepreneur doing businesses in many different things. I have 7 years of investing experience. So I started investing about, I think, 2014. And right now I do have a multiple six-figure crypto portfolio. Also, as you guys can see, I do YouTube. So I'm an active investing, personal finance, and entrepreneurship content creator. And I really do believe that learning the fundamentals of investing is super important. And it's really going to make you guys want to get started with investing in stocks, crypto, anything else. I truly do believe that investing is a way for anyone to build wealth. And that's why this channel is really dedicated to helping you guys build income and become millionaires in the next 5-10 years. So let's talk about why you need to get started investing as soon as possible. So in the last decade, Bitcoin has grown from around $1 in 2011 to over $40,000, $50,000, $60,000 in just one single decade. Now, depending on when you guys are watching this video, crypto is very volatile, so the prices are going to be changing all the time. But still, $1 to $40,000, $50,000, $60,000 as of right now, that's pretty insane. Cryptocurrencies are still becoming popular, and what I mean by that is the whole crypto space, it's still super young and it's just becoming more mainstream. It's a new way of decentralized currency that the governments cannot really control. That's what really makes it enticing for a lot of people. And right now it's starting to get more and more financial backing from institutions. More financial giants such as PayPal and Square are putting crypto onto their platforms, and that's really going to change the whole crypto space. So yeah, we are still early. If you're watching this video right now, crypto, it's pretty mainstream, but it's still not as mainstream as it could be. And for example, recently Tesla just bought $1.5 billion of Bitcoin and they added that to their balance sheet. So that was pretty interesting. Here's a quote from Maria Paula Fernandez that I really enjoyed. Investing in Bitcoin and Ethereum are natural ways to minimize the trust layer in governments and institutions that have failed to look out for the public and protect individuals from the fragility of traditional financial systems, as they are both assets that do not require central parties to verify, create, or administrate them. So yeah, it's really taking the power from the banks and from the government and putting it into the hands of the investors. So now let's talk about what cryptocurrency is, right? This is going to be a brief introduction to what you're actually investing in. So the crypto in cryptocurrency, that stands for cryptography, And this is basically the discipline of writing or solving codes. And then the currency part in cryptocurrency, that just means money in any form as a means of exchange. We're going to discuss the cryptographic side of cryptocurrency soon, but just for now, know that the name cryptocurrency is a purposeful combination of two important ideas. Now, why are we investing in cryptocurrencies? What's the whole point? So crypto is basically an opportunity at building a decentralized system of currency that is based upon majority consensus. This means that the whole system has pretty high integrity. We're basically eliminating the need for banks or middlemen to control money, accounts, and transactions. Now, as a result of all that, crypto networks are immutable, and this means that they cannot be altered or deleted. Immutable transactions make it extremely difficult or nearly impossible to manipulate data that's stored on the network. It's not just stored in one place, it's stored all over the place. And that also means that it's partially immune to government shutdown or intervention. So then how does cryptocurrency work? So on crypto networks, anybody that wants to can verify everyone else's money, basically how much they have in their accounts and their transaction history. So volunteers are constantly adding data to a public digital ledger, and this is a collection of all financial accounts and transactions known as the blockchain. Any user that wants to execute a transaction must pay a transaction fee to the volunteer. And these transaction fees, they're going to vary and it depends on the cryptocurrency. If you guys want to look up the different transaction fees, you guys can go to cryptofees.net. That was a pretty good resource for finding out that information. So over here on the slide on the right, this is an example of a centralized ledger, aka a general ledger. This contains all the accounts and transactions in one spot. So for example, a bank would have total control over which transactions are posted on this ledger since they are basically controlling it. And the owner of the ledger can pretty much manipulate or shut it down, giving it more authority than optimal. Now for a distributed ledger, aka blockchain, that's what it is. This is basically like a shared ledger. It's different from that general ledger. There really is no central administrator, so it's sort of like an asset database that is shared by all the participants within the network. So if there's a change in the ledger, then everyone is going to see that. And that basically results in more transparency, and we'll talk about that more on the next slide. So what is blockchain? The term blockchain refers to a type of database in which a collection of computers operated by different individuals in different locations is constantly adding information. So to put that in other words, blockchain basically refers to the digital public ledger where individuals are constantly adding information about digital crypto transactions. For example, Bitcoin, right? If I make a purchase or transfer from my wallet, everyone out there can actually see that transaction. They can see how much Bitcoin is in my wallet. They can see what money's coming in, what money's going out. And that's pretty much what makes it so decentralized, so that no single person or group has full control. Rather, every user in that group is going to retain control at all times. So let's talk about the name blockchain, right? So block actually refers to a block of information, and then the chain part, these are new blocks of info that are being added to existing sequences of blocks or a chain of blocks, as you can see on the picture on the right. So now that we've sort of got what crypto is out of the way, let's talk about crypto mining, because I think this is an extremely interesting way to make a little bit of passive income. So basically when you're mining crypto, you are the volunteer that is verifying the validity of digital transactions on the crypto network. As a miner in the network, you are racing to add a block of information to the blockchain. And to do that, you are essentially just solving really hard math problems and complicated codes. And when you're doing that, you are verifying identities and transactions. Solving these types of problems requires a really hefty computer system, which is known as a mining rig. So if you look at the picture on the right, that is basically a pretty intense mining rig, and these use a lot of electricity. That's where you've heard the thing about Bitcoin where it takes up a lot of energy to maintain the blockchain. So by setting up a mining rig like this, you can actually get a return for your investment. Every time a miner successfully adds to the blockchain, he or she is going to receive a certain amount of crypto coins. And the only way that new coins can be added into circulation is when miners successfully add to the blockchain. Now, you don't really need a crazy mining rig like that. You can have a pretty powerful computer and it will do the same thing. As long as you have a pretty strong graphics card like a GTX 3060, 3070, or 3080, you should be able to generate at least a few dollars of Bitcoin per day by mining. Now, instead of mining directly yourself, you're probably going to be using a mining pool or renting out your computing power on a platform like NiceHash. I actually tried mining recently and I used NiceHash, and I thought it was a pretty cool way to actually generate like $7 or $8 per day in passive income. If you guys are interested more in crypto mining, then I recommend doing a search on YouTube or Google. There's gonna be a lot of in-depth guides to how you can actually mine crypto, but This course is more going to be like how you can invest in crypto. I just thought it'd be pretty interesting to include one slide about crypto mining. So what are the popular cryptocurrencies, right? Obviously, the biggest cryptocurrency in the world is the original one, and this is Bitcoin. Besides Bitcoin, there are so many other new coins that are popular, and there's so many new coins being created every single day. But right now, some of the big crypto coins are Ethereum, Tether, Polkadot, Cardano, Ripple, Litecoin, Binance Coin, BNB, Stellar, Dogecoin, Uniswap, Chainlink, and there are a lot more besides these. But that's just an overview of some of the more popular cryptocurrencies. So now what dictates the value of a cryptocurrency? So it's just like any market, the value of this good, aka crypto, is going to be what people are willing to pay for it. If you have an overabundant supply of crypto and not that much demand, well, that's going to make the prices go down. And if you have a lot of demand but not a lot of supply, aka not too many people are trying to sell their Bitcoin or other crypto, then that's when the prices are going to actually go up. So it's not just supply and demand. There are some other sources of value. For example, the brand. An interesting example of branding is Dogecoin. You guys might have heard of it. It really exploded in 2021, but basically Dogecoin started out as a joke, right? It was made to appeal to the internet community using a really popular meme. And after being endorsed by Elon Musk on Twitter, the value of Dogecoin just like shot up astronomically. And that was basically a huge branding win for Dogecoin, because Dogecoin basically latched on to Elon Musk and his whole message. And that's what really helped this coin go up in value. Another source of value is utility, right? So what it can actually do. And a great example of this is Ethereum. Ethereum is a blockchain-based crypto platform that is actually more efficient than Bitcoin. I really do think that they can revolutionize the development of these decentralized applications. And then another really important source of value is importance. So a great example of this is Bitcoin. Bitcoin's not the most efficient crypto out there, but it is the first cryptocurrency. And it really had a really big role in catalyzing the expansion of the crypto space. That's why it's the original, the OG, and that's why it's the coin that most people think is just going to never die. Okay, so there are some risks in investing in cryptocurrency because it's pretty volatile, and there are many other different types of investing that are probably going to be a lot safer, but it's really hard to deny the appeal of cryptocurrencies, especially in the last few years where people have made a ton of money. So if you look at really OG coins like Bitcoin or Ethereum, even these types of coins have really volatile short-term price movements. That's really not normal for a popular and well-established investment. But yeah, that's just the way of cryptocurrency. It's always going to be quite volatile. And if you want the most stable long-term winners for crypto, it's probably going to be Bitcoin and Ethereum. Now, these are relatively stable. They're not stable at all compared to many other investments, but for crypto, they are pretty good. So I want you guys to remember this when investing. When you have greater risk, that means you have the potential for greater returns. And when you have greater returns, aka the price shoots up astronomically, this also presents greater risks as well. There are a lot of people making a lot of money on crypto. These are probably the stories you're going to hear in the news or on the internet, but there are also a lot of people that are going to lose huge amounts of money. They're probably not going to post that loss on the internet, so you're not going to hear about them as much. Okay, so let's talk about what crypto wallets are. So crypto wallets are softwares that are linked to the blockchain that monitor and execute crypto transactions. It's basically like a personalized bank account for your crypto. And every crypto wallet is going to have a public key as well as a private key. The public key is basically like your mailbox. It's the one that everyone can see, and people can send cryptocurrencies to that address. Now, on the other hand, there's the private key, and this is basically the key to your mailbox. The private key is going to allow you to sign off your transactions and validate your public key. So if it's not your keys, that means it's not your Bitcoin. So to truly own cryptocurrencies, you need to own the wallets that have the keys that represent your unique digital ID. If you want to actually hold your crypto yourself and manage it yourself, you're going to need an actual hard crypto wallet. And that's a little bit different from the apps like Coinbase and Robinhood, where they basically securely manage the rights to your private keys. We'll definitely talk more about that in the upcoming slides. Now, for the different types of crypto wallets, right? You have your hardware wallet, and this is basically an offline storage device like the Ledger on the right or Trezor. Ledger and Trezor are probably the most popular brands for hardware wallets. These are extremely secure ways of holding your crypto. A mobile wallet is another type of crypto wallet, and these are basically mobile apps, and your crypto is stored on there. So popular examples of these are Exodus and Atomic. Then you also have desktop wallets. These are installed on your desktop itself, and they offer a little bit more advanced features and more autonomy. Then you have your paper wallet, and this is basically a document that includes your keys and a QR code. This is pretty secure because to steal your wallet, people are going to need to steal this piece of paper. So you'll definitely want to secure your paper wallet in something like a safe. Now let's talk about the platforms for investing in cryptocurrencies that almost all of you guys are probably going to use. We'll be talking about platforms like Coinbase and Robinhood, which actually allow you to open up a standard brokerage crypto account on them. Now, when you open up a standard brokerage crypto account on these platforms, just like anywhere else, the capital gains are going to be taxed, but only when those gains are realized, aka when you sell. The great thing about these apps is that they are super easy to use, they're super accessible, and they are basically where 99% of people that are investing in crypto are going to start off with. So I will put some links to these platforms in the description below, and you can actually use them and get some free bonuses. So first I'm gonna take you guys through Coinbase. This is one of the most popular platforms for investing in cryptocurrencies. So I'm here in my Coinbase account right now. You can see this is my portfolio balance up at the top. This is my watch list right here of crypto coins that I'm looking at. If you scroll down here, they have a cool section called Top Movers, so you can see which coins are going up the most and which coins are going down the most. And if you come down here, Coinbase actually has a really cool reward system. So if you click this, you can see different ways that you can actually earn cryptocurrencies by doing these simple tasks. For example, for Stellar Lumens, you can earn a total of $10. $2 when you watch this video about what Stellar is, another $2 here, another $2 with this. And yeah, it's just a pretty cool way to earn some free money. And if you come down here, you can actually see that you can invite your own friends. So basically, when you invite someone and they buy or sell $100 of crypto or more, you're going to get $10 in Bitcoin, and they're also going to get $10 in Bitcoin. So I'll actually put my link in the description below if you guys want to use that and get $10 of free Bitcoin. You'll also be helping out my channel as well. Now I'm going to go here to my portfolio, and this is where you can see the value of your investment. So in the last day, you can see the value has gone down and up and down. So it is very volatile. You can zoom out to the last week or month or year. These really big jumps are when I basically deposited a lot of crypto in my account. And then you can come down here and look at your holdings for each of these. If you go to the prices tab, you can see it's going to tell you if the market is down or up in the last 24 hours. So as of right now, it's down 4.58%. You can look through all the different assets on Coinbase. And yeah, if you actually want to buy some crypto on here, you can click on this middle button, blue button right there. And then you can click buy crypto with cash. You can sell crypto for cash. You can also convert one crypto to another. You can send crypto to another wallet, or you can receive crypto from another wallet. So for example, if I want to buy some crypto right now, I can click that button. I'm gonna click Bitcoin right here. And if I want to buy something, I'll just input the amount I want to buy, and I will click preview buy, and then I'll press buy now. But yeah, Coinbase is a super easy to use platform. I highly recommend it. And if you click on each type of coin, you can actually see how much you have, and then you can also learn more about that particular coin. For example, you can go to the official website, you can read the white paper. It's going to tell you all the market stats, so the market cap, the volume, circulating supply, trading activity, and typical hold time. If you scroll down to the bottom, you can actually see all the different current news about that coin. So that's also a pretty interesting thing to read if you want. So now I'm gonna be taking you guys through Robinhood, which is another super simple and easy to use stock brokerage app that also allows you to buy and sell cryptocurrencies. I do wanna give a shout out to Robinhood for sponsoring this portion of the video and really making this whole video possible. So Robinhood is an app I've been using for a long time. I really love this app. It's super easy to use. It really makes investing so simple. It's probably one of the best user interfaces for any type of investing app I've ever used. So I'm here in the browse section of the app, and this is basically where you can see some of the trending lists, especially for crypto stuff. So if you look here, I can click on crypto right here, and it's going to take me to all the different cryptocurrencies that you can buy and sell on Robinhood. Now, if I want to invest in Bitcoin, I'll just click here on Bitcoin, and it's going to take me to this page. Basically at the top, you're going to see the live price of Bitcoin Like I said, it's volatile, it's always going to be changing. And under that, it's going to show you the actual change for the last day. If I want, I can go to the actual live price chart right here. I can look at the 1 day chart. I can look at the 1 week chart. I can look at the 1 month chart. And you can actually see the individual prices by scrolling through. It's going to show you the open price, close price, high price, low price, as well as the change. And yeah, if you really want to zoom out to the last 3 months or 1 year or 5 years, and yeah, if you look here, you can see the price in the last 5 years, just how crazy volatile it is, but also how much it's grown in the last 1 year. Down here, you can see your own position in the coin. So it's going to show you the quantity of Bitcoin you have, your equity, your average cost, as well as your portfolio diversity. And here's where I can see my return for today, as well as my total return. And I really love this section because you can actually read up on any news for Bitcoin. I check this out pretty consistently. It's a great way to get more information about the current market. And down here is your history. It's any buys and any sells that you have made. I've also bought some Dogecoin on Robinhood. So here you can see the price like before. You can zoom out to see the 1 year price, 3 month price. You can see the quantity, average cost, equity, and then same thing with the Bitcoin side. You can look up any news about Dogecoin, and here's going to be your history about any buys or sells you have made. Now coming back here to this browse page, I really do like this trading list page because you can look at altcoins. For example, if I take a look at the Ethereum family, I can explore all Ethereum-based currencies. So right now, Ethereum and Ethereum Classic are available on Robinhood. Robinhood's also really cool because you can invite your friends and actually get free stocks for referring them. And I really love the statements and history section because this is going to actually show you all your recent history, so any dividends you receive, any buys or sells you make, and then also if you want to see your tax documents, this is a really great way to see that. Let's talk about some of the benefits of Robinhood, and the first and most obvious one is 0% commission fees on all crypto and stock buying and selling. So basically, if you're buying $10 of Bitcoin on Robinhood, you're actually going to get $10 of Bitcoin. And it's the same thing with selling. If you sell $10 of Bitcoin, you're going to get $10 in cash back. On their platform, you have Bitcoin, Ethereum, Dogecoin, and some other various altcoins that you can buy and sell right now. There's no account minimums. And like I said before, it's a super easy to use interface. I absolutely love it. And it's also extremely secure. They have not been hacked into, unlike many other platforms out there. So I do feel really safe holding crypto in my Robinhood account. There's a very, very low barrier to entry when you use Robinhood. So they make it extremely easy to actually start investing, which I absolutely love about their platform. And what a lot of people don't know is that they store your coins for you one-to-one in cold and hot storage. This does mean that your crypto is extremely secure. So to document how awesome Robinhood is with their 0% commission fees, I'm actually gonna be buying $100 of Bitcoin on Robinhood, as well as $100 of Bitcoin on Coinbase. So I'm gonna click here, buy. I'm gonna click $100 of Bitcoin, $100. Okay. I'm gonna preview the buy and review. Cool. Bitcoin purchased on Robinhood and order submitted on Coinbase. So if I compare these two, you can see that there actually is a pretty big difference, right? So on Robinhood, I purchased $100 and I got 0.00252,183 Bitcoin. And over here on Coinbase, I got 0.00244,215 Bitcoin. There are a couple other platforms that you guys can use. I'm just gonna go over Gemini real quick, as well as crypto.com. This is Gemini, and this is another platform for actually investing in cryptocurrencies. I'm on the desktop right now, and you can see you can actually buy and sell these coins. If I go here to Bitcoin, it's going to show me the price chart. I can zoom out to the 1 week, 1 month, 1 year price chart. I can click watch this. I can set alerts as well. It's gonna tell me about Bitcoin. It's gonna show my own Bitcoin here, so I actually don't have any Bitcoin in my Gemini account yet. And if you want to buy and sell Bitcoin, it's actually quite simple. You just go up here, select buy, or you can click sell. You can say if you want to sell it once, daily, weekly, twice monthly, or monthly. And then you can choose how much you want to sell. Gemini also has a really cool thing called Gemini Earn. So if you actually have any of these coins right here and put it into your account, you're gonna start earning this annual percent yield that's listed right here. So for example, let's say you have Litecoin, right? If you have Litecoin in your account, you can earn 4.5% on that. If you have Ethereum, you can earn 3.05% as of right now. If you have Bitcoin, 2.05%. And yeah, this is a pretty interesting way to actually make some money from the Bitcoin or cryptocurrencies that you hold. I'll put my link to Gemini in the description below, because if you use that, you're gonna get $10 in free Bitcoin, and then you can get your own link and then invite friends. They'll get $10 of free Bitcoin too when they use your link, and you'll get $10 as well. BlockFi is another cool way that you guys can actually earn money on the crypto that you have. So if you go to your interest account here, you can see this is my current interest balance. This is the total amount of interest I've been paid, and this is my accrued interest in the last month. So for example, if you have any Bitcoin, you guys are gonna get 5% APY on that. I'll put the link to BlockFi in the description below. You guys can actually get up to $250 for free by using that link and signing up. But yeah, this is cool because you can actually open up a BlockFi interest account and earn interest on any cryptocurrencies you have stored on BlockFi. So for example, for Bitcoin, if you have 0 to 0.5 Bitcoin, you're gonna get 5% APY on that. Any Bitcoin you have above 0.5 but under 20, you're gonna get 2%. And then if you have over 20 Bitcoin, any amount over that is gonna get 0.5%. You can also get paid for having Chainlink. You can get paid for having Ethereum, Litecoin, as well as these coins that are actually backed by the US dollar. So you can get up to 8.6%, 9.3% on those. So yeah, that's just another cool way to make some passive income from your crypto holdings. And then lastly, this is another very popular app for investing in cryptocurrencies. And this is basically the crypto.com app. So here I am in my dashboard. You can see my total balance up there. I don't have much in here, but a lot of people do use crypto.com as one of their main platforms. If I go here to Bitcoin, I can actually, look at the 1 day, 1 week, 1 month, 3 month, 6 month price chart. You can see right now Bitcoin's trading at just over $40,000 per coin. You can see all this other data right here. And if you want to buy Bitcoin on crypto.com, you just go down here and click buy BTC, and you can add a credit card or a debit card and purchase like that. You can also use your crypto wallet to purchase Bitcoin or your fiat wallet. Crypto.com also has a cool way to earn some passive income from your crypto holdings. So you guys can take a look. If you want to stake any of these coins, you're gonna get 6.5% for Bitcoin, 5.5% for Ethereum. It's just another cool way to make some passive income. If you guys want to use my link, I'll put that below. And if you use that, you're actually going to get a $25 sign up bonus. And once you're signed up, you can actually give your friends $25 when they sign up using your link, and you're going to get $25 in rewards. Okay, so now that we've gone through all the walkthroughs of these platforms you can use to invest in cryptocurrencies, let's talk about doing your own due diligence and how to actually research crypto. What due diligence means is basically you want to investigate, audit, and assess any business or any asset you're thinking about investing in. You absolutely want to take the time to fully understand anything you're putting your money into, because if you don't understand, you're really at a big disadvantage. So we'll talk about the fundamentals and the valuation metrics that I think you guys should know. So the market cap, the NVT ratio, circulating supply, trading volume, MVRV ratio, the Mayer multiple, and basically what volatility is. Then we'll go through some qualitative indicators such as the website, getting to know the creators, GitHub, the total addressable market, the usefulness, catalysts, contact points, the white paper, and also looking at news. So let's start with valuation metrics, more specifically the market capitalization. The market cap provides the total market or the network value of a cryptocurrency. So to get this, you're basically taking the total coin supply and multiplying it by the latest trading price. Let's say, for example, there's a coin out there, there's a total supply of 10 coins, and the latest trading price is $5. That's going to result in a market cap of $50. Now, market caps can be a little bit deceptive with any forks, and forks are basically new software protocols or updates that can allow for spin-off coins to be forked off of a parent coin. So whenever a new coin is forked off of a parent coin, this new coin is going to inherit the coin supply of the parent coin, and as a result, new coins can appear to look well established and valuable. So that is a little deceptive, just thought you guys should know that. And now let's talk about the network value to transactions ratio, aka the NVT ratio. This is essentially the PE ratio, or the price to earnings ratio of that crypto coin. And this is going to describe the relationship between the market cap and the transaction volume. To calculate the NVT, you take your market cap and divide it by the daily transaction volume. You're essentially looking for a lower number, right? So anything under 15 is probably good. It's going to be bullish, and anything under 25 is more likely to be bearish. Now you'll notice that the price to earnings ratio for stocks is similar, but for crypto, there's no earnings, right? These aren't actual like revenue generating companies. So that's why we have to use the NVT ratio. Another thing to look out for is the circulating supply. So this is the approximate number of coins circulating in the market. You can easily find this information on many different sources such as Yahoo Finance or CoinMarketCap, and pretty much any website is going to have this information. Another important valuation metric is the trading volume. So this is basically the number of coins that has exchanged hands in the last 24 hours. The higher the trading volume, the more this coin is being traded back and forth, aka the more activity there is, and the lower the trading volume means that there's not as many people buying and selling right now. Now the MVRV ratio, this is the market value to realized value ratio. And to find this, you're basically taking the market cap, what we talked about earlier, and divide it by the realized capitalization. This is going to consider any lost coins or coins that are no longer in circulation. If the MVRV ratio is under 1.5, that could mean that the coin is undervalued, and if it's over 3.5, this means that it could be overvalued. The Mayer multiple, this is another one that's important, and it's basically the price divided by the 200-day moving average. So for example, if the current price is $5 and the 200-day moving average is $10, this means your Mayer multiple would be 0.5. Anything under 1 could mean that it's bullish, right? It could break out. And anything over 2.4 means that it could be bearish. This makes sense because if your Mayer multiple is smaller, it means that the current price is under the 200-day moving average. And if this ratio is over 1, this does mean that the current price is above the 200-day moving average. Volatility is also important, right? This is basically going to measure the extent to which a cryptocurrency's price fluctuates over time. And it's measuring the standard deviation of the current price relative to the 30-day moving average. I know that some of these might seem a little bit confusing. Don't really worry too much about how they are calculated. A lot of the crypto websites are going to calculate them for you and just show you the number. Basically, you just want to know what they mean and how to interpret it. Now for the qualitative indicators, the first one we're talking about is assessing the website. So obviously the website has to look good, right? I recommend looking at the aesthetic, the design, and how professional it looks. If it looks scammy, then well, the coin could be scammy because there's so many coins out there that don't have any actual value and they're just scams. So you want to definitely see if the website looks good, and you also want to see what information the website presents and if it's transparent. This is a website for Ethereum on the right. Obviously it looks great, but that's because Ethereum is one of the best coins out there. We'll also want to look at the creators of that coin, right? You want to know their reputation, what their technical background is, and whether or not they are trustworthy. So I just say trust your gut on this. Do some quick research about who founded that coin and whether or not you'd actually trust them. Now with GitHub, this is actually going to show you the code of many of these projects. And if you're a potential buyer of that crypto, you can examine the crypto network's code and see how it is, right? This is more for the advanced and experienced coders and programmers out there. Otherwise, you probably won't know what's going on. Another qualitative indicator is the total addressable market, TAM. And you're going to be asking, how will this particular cryptocurrency appeal to the market it's addressing? Like, is it actually going to be creating a new market of its own? For example, Ethereum, it's proposing to revolutionize the development of decentralized apps. So that was a brand new use, and it's something that had a lot of utility to it. And the usefulness, basically this ties in with the addressable market, like what utility or value can this crypto bring? If it's just a cash grab, then it's probably not going to have any utility. But if it actually does have some usefulness, then that is something that you do want to see with a cryptocurrency coin. Catalysts are any unexpected events, announcements, updates, or revolutions to occur with this crypto. So for example, Dogecoin, right? The price of Dogecoin can actually be quite influenced by any tweets by people like Elon Musk. Obviously, this means that it can be quite volatile and you really don't have control over the catalyst because we don't know if Elon Musk is going to tweet something good about Dogecoin or something bad. And then finally, contact points. So how can potential buyers or investors learn more about the crypto coin? How can they actually reach out to the creator of the coin? And then how frequently do the crypto creators reach out and update their investors? These are all things that you should be considering when analyzing a specific cryptocurrency. Another thing that a lot of people actually skip is reading the white paper. So a crypto's white paper is a document that's created by the creators of that crypto, and it helps to sell it. It's going to include facts about the crypto, any diagrams, statistics, and quotes. It's more technically oriented, and that's why a lot of people, they won't actually read the white paper. So here's the general structure of a coin's white paper. First, you have the abstract. This is just going to be a summary of the coin. Then you're going to have the introduction, and this is where they're going to present any problems and propose any solutions they have. Then they'll get into the technology. So what sort of technology is actually backing this crypto? They'll talk about the transaction tech, how it's exchanged. They'll talk about the mining tech, how the crypto is created and mined, and also the network tech. So how is information communicated within the network? They'll talk about any incentives they have, so why you should participate in this crypto network rather than others. They'll talk about the emission plans, so how will the creation of new coins or tokens be conducted? There's going to be a conclusion, so they're going to review all the presented information from the earlier parts of the white paper. And finally, there's probably going to be references, so these are the sources and citations. Over here on the right is Bitcoin's white paper. It's just the first page of it. If you want to read up on Bitcoin's white paper, you can easily find it online. Just search up Bitcoin white paper and the whole thing is going to be there. If you want to stay up to date with any crypto news, I do think that's extremely important because crypto is really reliant on the news and any current events that are happening. So this is a list of some great news sources I recommend. Of course, you have Robinhood and Coinbase. These apps, you can actually buy and sell crypto, but they also have a ton of articles and information about cryptocurrencies. You also have Coindesk.com. This is a news source for many different cryptocurrencies, and you can check the price movements and other data on there. CoinMarketCap.com is another one similar to Coindesk. You also have GeekWrap.com. This is a live news aggregator for all cryptocurrency news. You have coincenter.org, and this is a resource for specializing in politics and legislation regarding Bitcoin and other crypto coins. And you have reddit.com. There's actually a ton of really interesting information on this forum. And these are communities where more experienced as well as beginner crypto investors are just interacting. So people will post links to useful information. There's a lot of intriguing discussion on here. And yeah, it's just a cool place to really talk to other people about crypto. Let's talk about what tokens are. So tokens are units of value that are issued by crypto startups and represent pieces or shares of a crypto network. So these tokens themselves are sold for fiat or cryptocurrency to raise money for that crypto startup. For example, they can be issued by Ethereum, Waves, or EOS. Now there are a few different types of tokens. The first one being equity tokens. These are like digital shares of a company. The second is utility tokens. These provide a certain privilege or opportunity to the owner. And then you have asset-backed tokens, and these are backed by a real commodity, for example, diamonds or real estate. If you look at this picture right here, you can see some examples of coins are going to be Bitcoin, Ethereum, Ripple, Litecoin, Cardano, and IOTA. And then examples of tokens are going to be things like Tron and VeChain. So yeah, just different ways of categorizing cryptocurrency. Let's talk about initial coin offerings, ICOs. And these occur when a crypto company is trying to raise money to create a new coin, app, platform, or network. Essentially, they are the IPOs, the initial public offerings of the crypto world. Now with ICOs, these can be extremely risky. You could lose all your money. That's why I say definitely have some caution before you actually put money into any ICOs. Since crypto is such an unregulated space, there have been many failed ICOs as well as fraudulent ICOs. But if you do want to take a shot and take a gamble, you can basically register for the ICO through the network's website. You'll move your Bitcoins or Ether to the wallet, and then you're going to buy ICO tokens by sending crypto to their address. A lot of ICOs were scams back in 2017, 2018, so I definitely recommend avoid these if you can. Now let's talk about timing the markets. If you guys are interested in timing the market or day trading cryptocurrencies, I say it's a little bit more risky. This is always the case when investing, right? Short term, it's always more risky. Long term, it's a little bit safer. I'd recommend learn about the strategies for day trading stocks, as its strategies are going to be pretty similar to when you trade cryptocurrencies. I'm not going to get into them in detail in this video, but you can look into the Bollinger Bands, daily volumes, and trading indicators. Basically, there's going to be a lot of charting involved. The most important concept though is that time in the market beats timing the market. Most day traders are going to lose money, but most people that stay in the market for a long time, that are long-term investors, are going to make money. If you guys are interested in investing in crypto long term, but don't want to do a lot of research on each of these coins, I'd actually recommend looking into the Crypto 20 index fund. It is what it sounds like. You're holding the top 20 coins at any given time when you invest in Crypto 20. They're going to readjust the funds on a weekly basis, and you can earn profits by holding a single token of the fund. Not necessary, but just another different way of investing in crypto. So now, how much money should you invest? I always like to remind you guys that cryptocurrencies are still a pretty speculative and volatile market. It's new, it's still developing, and it's not fully understood by most investors. As a result of that, it's going to be a risky investment no matter what. Don't expect to strike it rich or become a crypto millionaire just by buying some crypto and holding it. I'm not trying to deter you from investing in crypto. I'm just saying that for every successful investor, there are a lot of people that lose money. So that's why you need to invest with caution, and that's why you need to do your own due diligence. If you're trying to time the market, I'm just gonna say that's probably really hard to do, because if you could time the market accurately, then you'd be the wealthiest person in the world. So no one can time the market. The safest way to invest is just invest your money into whatever crypto you believe in and leave it there long term. For most of you guys, I wouldn't recommend putting over 5 to 10% of your whole portfolio into crypto. The rest should be invested into index funds, stocks, real estate, other things like that. And I do want to remind you guys, I'm not a financial advisor, so these are just my opinions. We're almost done, you guys, but I want to remind you that cryptocurrency is taxed. You are going to be taxed for any capital gains that you receive while trading crypto. So let's say you put $100 into Bitcoin and you sell it for $200. You basically are receiving a gain of $100. That $100 gain is going to be taxed either as a long-term capital gain or a short-term capital gain. If you're holding the coin for over 1 year and then selling it, that's going to be a long-term capital gain. And that tax level is between 0 to 20% based on your income level. On the other hand, if you're holding that coin for under 1 year and you're selling it for a profit, that's going to incur a short-term capital gain. This is going to be taxed at your normal income tax bracket. So that's going to be up to 37% federal as of right now. That's why I always recommend, if you can, hold for over a year, because your tax is probably going to be a lot less than if you just kept buying and selling and buying and selling. Okay, so what are some actionable steps you guys can take right now? First, I recommend just open up a crypto investing account. You can use Coinbase, Robinhood, Crypto.com, Gemini. Any of these platforms will suit you well, and I will include links to them in the description below. If you use those links, you'll be helping to support the channel, and you're also going to get a free bonus as well. After that, you want to fund your account, so you want to deposit money from your bank account. And before actually investing in anything, you're going to want to do your due diligence. You're going to want to do some more research about what you're investing your money in and what each of these coins actually does. Then you're going to invest some of your money into the crypto of your choosing. And like I said, crypto is quite volatile, so pick wisely and only invest what you can afford to lose. The crypto market is always changing, so that's why I recommend always keep researching, always keep learning about crypto. That way you can stay up to date on new opportunities. And yeah, just being in the know for what you're investing in is extremely important. Thank you guys so much for your time. I know that was a very long course, but I really do hope that you guys got a ton of value out of this free course. I really encourage you, if you like crypto, to start investing today. The first dollar you invest is always the hardest, but it gets easier from there on out. If you enjoyed the video, make sure to hit that like button and also subscribe to my channel to see more videos just like this. I make a ton of content about personal finance, investing, and entrepreneurship. Again, thank you so much for your time, and I'll see you in the next